So good afternoon, my beautiful people. We are lucky and blessed today to have Travis. Well, first, before we introduce Travis, let me introduce myself. My name is Michael Brown. I am the founder of Real Estate with Michael Brown at Keller Williams NY Realty. And today we have Travis Bowens with Homebridge. And today what we want to talk about with you guys is we want to explain multiple offers and how that is beneficial to sellers, right? Because this market has just been not beneficial to many buyers, but to the seller, this is a good thing, right? So Travis, what happens in a multiple offer situation for the buyer? And I think you and I will both have different insights because you come at it from the financing aspect and I come at it from the more emotional, get them in the house kind of thing.
Well, it was really interesting because there's such a fine line when I have conversations with buyers, because most of the time that they call me, especially when it comes to the multiple offer situation, is because they've just had a conversation with their agent. They've just had a conversation with Michael Brown. And Michael Brown has told them, hey, listen, the listing agent has shared with me that there's 10, 12, 15 offers. And you're like, what do I do?
Right.
And from your aspect, from a real estate perspective, it's how bad do you really want the house? What is your investment in making this your home? And for a lot of people, they might have missed out on 3, 4, 5, 6 homes, and they just want to kind of end the process. They want to get into a house. And so they make a bid and they are rah. And then Mike takes a look at their pre-approval and says, well, you're approved for $700,000, you know, offer $765,000, you got to call Travis. Then they call me and it's a little bit of a different conversation because now the emotion has subsided somewhat. And now they're like,
good point.
What are my numbers?
Right.
What am I going to pay? And then we talk about the numbers. And then it's, well, what do you think? And my approach really is showing them what the difference in payments are. So it's really, hey, here's where your payments are. It's only a difference of this. And then we have to talk about, I talk about average appreciation, what that appreciation would be like and how long they plan on staying in the home. But also it's, well, what are your goals? If this is a home that you're going to live in, you're going to treat it a little bit differently than if your goal is to purchase a purely investment property. Right. There's some difference in thought processes. So for the buyer, it's really drilling down and making sure they understand from their standpoint what they're doing so that they don't get attorneys, then sit down and figure out this is not what they want to do.
This is not for them, right? Inspections, go through all these hoops and then realize, oh, I don't want to spend $4,000 a month. I really wanted to spend $3,600 a month.
Right. And so that's why one of the things that's important, that I do is making sure that we are pre-approved from the beginning, the highest. Unless someone says, I don't want to go above this at this particular time, then we adhere to those, to that thought process, right? But pre-approving someone for the max. Therefore, if they put in an offer for the max, we know that we can't really go above that. They're pre-approved for the max. So if you're pre-approved for $1 million, that's it. You probably should not, well, you might be able to look at a house at $1 million, depending on where it is, because you may have less competition, right? Depending on where that house is.
If
you're in White Plains, New York, forget about it. You're gonna enter into a bidding war most likely, right? So really from that standpoint, Mike, it's really having a conversation, educating on what that means for them, what that process potentially can look like. As I mentioned before, hey, listen, your contract, speak to an attorney, your contract, they may send over a contract that indicates you're going to have to cover the shortfall. Do we have the money to do that? And you're signing contracts that state that.
What does that really mean for the borrower? Could you elaborate? Because I think sometimes people assume that, hey, if it doesn't appraise, we're out, we're good. I don't have to buy this house. But if the language has been changed in the contract to put that, what is the impact for the borrower?
Well, if so, let's say the house was listed at, I don't know, let's say 700,000.
Mm-hmm.
And let's say, I'll use a conservative number. Let's say it was bid up 30,000, which
Right.
compared to some of the numbers I hear out here, that's pretty conservative.
Right.
So now you're paying 730, right? Well, if you were going to put down 20%, which would have been 140, right?
Mm-hmm.
You now have to put down 20% of the 730. However, if it only appraises for the 700,000, you now have to make up the shortfall and cover that $30,000.
Or
Right?
you now forfeit the deal. You're going to be in
Right.
default of.
Right. So now if you don't, unless you get denied for another reason,
Right.
right? So now you may be, so now what happens is, if you don't have enough to do that, you may, to be at the same 20%, you may now have to be at a higher loan to value, meaning you're putting less money down because you have to cover that shortfall.
Got you.
Right?
I got it. Mm-hmm.
Right? Or the same amount. And now you may be at, I'm just using numbers. So now instead of putting 20% down and having 80% equity in the home, maybe you have 85 equity or 90%.
Because you had to come up with more, but the value wasn't there anyway.
Right.
So
So you may be at a higher loan to value. So you may be borrowing, 85% of the value of the home or 90% of the value of the home, right? So now we have to take a look and say, okay, I'm going to be responsible potentially for mortgage insurance, right? What is the difference, right? So generally speaking, if my interest rate is the same and now I have mortgage insurance, my payments may go up by, let's say, $120 or whatever it is. Is that something I'm willing to do? So these are different scenarios that we actually walk some clients through, because I can tell you that you mentioned before the emotional. People, all of them, they're ready to do it, but they have a different conversation on the financial side.
Yeah.
All the time. What are the repercussions? What's going to happen if I do this? And some people, and I did close a loan, and this was a little bit earlier, maybe about a month and a half ago, where someone called me on the side and they were like, I'll borrow from my family, but I'm hoping, Travis, that you can make this happen. I'm like, whoa.
We don't put hope into finance.
Travis is not the appraiser. Travis is not going to make that happen. The appraiser is going to determine that. And I don't have a hand in influencing, and nor do you want the appraisal to be influenced, right?
Right.
So it's really educating people through the process to let them know he made a decision to move forward. And it did appraise. He was happy that he did not have to go to his in-laws or his parents and get the money, but it did appraise. So that's, as we're talking about this, it's just to let people know, like, you want to make sure that you don't make an irrational decision on a hope and prayer, because if something doesn't go in your favor, it's not a good feeling to feel like you're overpaying for something, but you did go into contract.
Right.
The toughest thing that I see on your side, Mike, for the buyers, is that a lot of times they have a very short window to make a decision. A very short window. It's like, hey, you got an offer. Do you want it or not?
Right. It just happened to me just now. The house came on the market yesterday, and the agent remarks, there's already an accepted offer. So I called the buyer. Like, you have to go see it today. If we don't go see it today, then and things happen, right? We have another house I'm working with the buyer on, and they had an accepted offer the first week it came out, multiple offers, and all those offers are gone now, right? Because things happen. People go find other houses. People fall out of love. It's an emotional decision now. So now my buyer's got a shot, but they still need to move quickly. And not everyone, to your point though, not everyone can move that quickly psychologically.
Right.
Not everyone makes those kind of decisions, $100,000 million decisions overnight. So this market has, I think, forced people to do things that are outside their comfort zone, good and bad or indifferent. It has been a strange market though, for that. But how does it affect, or what happens in a multiple offer situation for the seller? And how is that beneficial? I mean, my sellers that have multiple offers, 2 years ago, but pre-COVID, we would put a house on the market. And depending on if you priced it slightly below market value or right at market, if you priced it at market value, the days on market still were about 58 days, 60 days. You price it at market value today, the days on the market are like 2 weeks, right? Yeah. And there's some luck in there for our homeowners because they can get more than they would have gotten a year ago or a year and a half ago or 2 years ago. But this is probably the most they're going to get. When I was looking at particularly Yonkers, just a big city in Westchester, the appreciation in the last 10 years came in the last 6 months. Wow. Almost all of it, because of COVID and because of that emotional decision of people wanting to get out of New York City or because the money is really cheap or the low inventory, right? All those three factors have really made it good for my sellers. In fact, I have another house where my sellers, the house was on the market before with 2 other agents. This agent did not sell it pre-COVID, right before COVID. I listed it a month before we were shut down. Actually, I'm sorry. I listed it fairly recently. My days are confused now. I'm like, wait a minute, January 2020. No. So we listed it in December and got multiple offers at the same price they had it listed before. So they had it listed before at this price. They got no offers. And COVID came and they now have multiple offers. And just a sign of the market. They're ecstatic. I mean, in fact, we got them more than what they were asking 6 months ago.
Wow.
So,
wow.
and I talked to a lot of homeowners. There was an article that came out not too long ago about the shortage of inventory. It's caused by a number of ways. I talked to a lot of homeowners, and many homeowners are afraid to put their house on the market because what they're looking for isn't readily available yet. And it creates this weird cycle of, well, I'm not going to do it yet until I find, but they need to sell to buy. It just creates a whole emotion of things. And, I think I see a light at the end of the tunnel with that part of it. But it's always great for a seller to get bidding wars. And, for me, how I like to position them for that, if I can, if they take my guidance all the time, right, is whenever I come up with in a CMA, and let's just say we have a house and the CMA, my analysis says it's worth about 500 to 550. Let's price it on the lower end, because the more eyeballs I get on the house, the more people that look at it, the more people that click on it, the more people that go show their offers, the more open houses we have, creates this fear of missing out, for the lack of a better term. And the sellers really make out because of that, I'm finding.
Mike, really quickly, break down what a CMA is.
Oh, great question. So CMA, comparative market analysis. And what I do, particularly for me with the CMA or the comparative market analysis, is I like to do what's called bracketing. Hold on 1 second, Travis, because my phone, that's what happens with these Macs. The phones ring on your Macs. There we go. So I like to do what's called bracketing. And what I do with bracketing, say I have an 1,800 square foot house in the 10710, built in 1930. We look at some houses that may be 25% smaller. So we'll go maybe to 1,500 square feet, and we'll go as high as 25% higher. Maybe we'll go to about 2,400 square feet and look for houses that were built in a similar time in a similar condition within a half mile of the home and come up with an analysis of what the market value is for that neighborhood. And it's practically the same thing that appraisers do. So if we come up with a value, say we come up with a value of an X, and that X is 500, but the homeowner wants 750, yeah, we could list it. But even if I found a buyer at 750, that conversation we have to have up front with the homeowners that there's a big possibility that this may not get to the finish line because I can't prove, or I don't have any justification of this value. And I never tell people it's not, their house isn't worth it. I just can't show them on paper based on how the banks look at it. So even if we found the buyer, they're going to have to come up cash, or they're going to have that similar situation you mentioned where they're going to have to put down more money down to have a lower loan to value ratio. But because they want to be in this neighborhood, they'll do whatever they want, whatever they have to do to get in there. And that's happened a lot in our market. A great question. So from a buyer position, how do they position themselves in the best way in these multiple offer situations? You know, if they're going to look in the Highlands, right? We know the Highlands, you know, 2 houses come on the market, they're going the first. But how does a buyer position themselves so they have a really good shot of winning in a market like that?
So it's a great question, Mike. And I'm glad you asked that, because I think we do a lot to try and position it, and I'll talk about that. But a lot of it has to do with, I think, on what the ultimate goals of the seller are, right? And, you know, how they've been coached or educated by the listing agent. Because if the ultimate goal is to get just the highest number, then we may not be able to work with that because it's just strictly numbers. But if it comes down to what the product, the program, and working with the seller to find out what their needs are. Maybe they have to move in 6 months. Maybe they're moving in 90 days. And maybe the buyer can accommodate that. Maybe they need to leave stuff, you know, they're moving across country and they've got to send for stuff. You know, I've got a friend right now who's buying, and he worked out a deal with the seller where the seller can leave stuff in the garage, and they're going to keep the code the same, and his daughter can come in as she pleases and get the stuff and ship to him over the course of, let's say, the next 90 days. So it's
they give him a time period, right?
Right. Figuring out what's important to the seller, but from a finance or mortgage finance perspective, we do everything we can to make sure that our pre-approvals are airtight, and then we do something over and beyond that. And I was doing this probably about 50% of the time a year and a half ago, and I'm probably doing it 95 to 98% of the time now. And that is right after the pre-approval process, we send our buyers potential buyers directly into underwriting upfront prior to them even finding a home. And then we are.
And why is that? What are the advantages or disadvantages of doing that, especially in this market where we have the multiple offer situations? Yeah.
Well, the reason why we're doing it is to make sure I get a lot of calls from agents that I may not have met in the past who want to check out the validity doing their due diligence, if you will, for the pre-approval. The interesting thing about what we do as loan officers is the fact that while we are charged with providing the pre-approval to the buyers, we are not the actual ones that are able to approve on behalf of the bank. So there's a little bit of a disconnect there, right? The buyers feel that they have this pre-approval and they feel that they have the golden ticket.
Right. The Willy Wonka.
Right. It's a golden ticket. They are ironclad. But it's not always the case. The underwriters are the one who have the authority to actually approve on behalf of the bank.
Who are
So,
underwriters? What are they? They always sound like these unicorn mythical creatures that you guys have in the dungeon somewhere at your office.
well, sometimes I got to double check to make sure, there are no unicorns running around here, because they do such a tremendous job here. But the underwriters basically have underwriting authority. They have the ability to actually approve the loans. They review the loans. All of the information that we gather and provide to them, they review it to make sure that they can render a decision, being to approve or decline that loan, right? Or approve with conditions to say, okay, we're approving it, but you have to meet these conditions. And 99% of the loans that come out from the underwriting review come with conditions. So what we do is we reverse the thought process. And what I say is, hey, once I've reviewed your file, once I've given you your pre-approval, which is a pretty darn good one, I
Mm-hmm.
want, without a shadow of doubt, for the listing agent to know that the underwriter has already reviewed this. They've double checked everything. You will get, the only reason why we can't call it a commitment letter is because there's no property attached to it. But they get essentially a commitment letter that reads that it's the property is to be determined, TBD, with any conditions on there. And we can continue to work the conditions. So we do our best to make sure that we give what I feel is a leg up over those that do not have that commitment letter, all things being equal, that the offer that they putting in is pretty competitive.
You did that for one of my buyers, and it helped us get the house in a competitive situation. And term wise, the buyers weren't, perfect. They weren't 25% down, so 5%, whatever it is. Whatever you got, we'll figure out. We'll try to get you into the home. But that listing agent called you, and I remember calling the listing agent back, and she was like, "No, we're good." Because I think, again, we're in the industry, all of our colleagues, whether it be on the mortgage side or the real estate, they're seasoned, and they can kind of get a whiff of if something's not 100% or not, right?
Right.
After talking to you for 5 minutes, they'll get an idea, right? These buyers are probably going to be able to get to the finish line, or they'll have some comfort level that they won't be able to. And I
Right.
think that makes a world of a difference in this market.
Absolutely. And it's just, again, it's a tool in the tool belt, and it's something that we should, I can tell you right now, probably 99.9% of everyone, whether they have going FHA, conventional or jumbo, 99.9% of everyone that I come across is going through and getting right now and getting these approvals, underwriting approvals up front. So it's a great
Very
tool to
smart.
have. I think it really, the other thing it does is it really prepares the buyer, because they're going through this as if they have a loan. So they're getting the loan estimates, they're getting all the disclosures, they're signing them. We're taking them through the process up front so that when they do find a home, it is not a foreign experience for them. And it works.
Why do I have to sign this document? Why do I have to give you another pay stub? They're already, mindset wise, you got them
Right.
used to doing this from the beginning.
Right.
Because
Right.
I've heard from different buyers, just in general, they said, "Oh, I got to send another thing to this mortgage guy. I have to," and of course, they have to update documents often. Like you
Right.
said, there is often contingents or requirements. But I don't think that the conversation was had up front, or the mindset, hey, let's get used to submitting documents. Let's stay up to date with my mortgage broker so that they know if anything changes with me financially, it's not at the 25th hour. It's not when we're about to close and we pull the title and we're like, what happened?
Right. And I think to go along with that, more than ever, and we've talked about this before, Mike, more than ever, constant communication, especially when things are rapidly changing in this environment, not just with the loan officer, the agent, and the buyer. Sometimes things get lost in translation. It doesn't matter who you are. I recommend doing a three-way call, making sure that we all get on a conference call or Zoom or whatever it is that you may use to really hone in and make sure that the clients, they have an understanding, because most of the stuff that comes up really is through a lack of understanding or misunderstanding through the situation.
So true.
And when people are looking to put in offers, it's like rapid fire. They say it's rapid fire.
I need it right now, right
now. And say, well, wait a minute, right? So making sure, because sometimes people will, I have people who call me, hey, Mike said I need a pre-approval for this. Okay. And then they want to hang up, like, whoa, wait a minute. Don't you want to talk about the numbers? Let's review the numbers. Let's make sure. And they're like, oh, wow, yes. Because then they take the offer. Then I send out disclosures to them that says their payments are wide. What do you mean?
Right. They're like, right, multiple heads.
It doesn't necessarily, translate. So I think those are all important pieces and components just to make sure that, when you're in a multiple offer situation or hybrid situation, that you have these conversations, you use whatever you can in your tool belt. I am noticing that some agents now, buyer's agents, are CCing me on the offers.
Smart.
They're CCing me on the offers. So I see the offers. And then the listing agent's able to, so I'm seeing what's happening in real time,
right. You're not just sitting back waiting for them to say, hey, I got a house. Can you give me the money?
Yeah. So
you're part of the process now.
Part of the process. Mm-hmm. And if someone has a question, they can dive right in and just ask me or pick up the call, right? So, and they're making a point to say, hey, I've included the person on this email who has written a pre-approval, right? And I find that to be very helpful during the process as well, especially during the multiple bids and if you need to move quickly.
And as someone who works with a lot of sellers, I like it when the buyer's agents do that. Right? They send me the pre-approval, they CC the mortgage broker, so that when I do call the mortgage broker to do some due diligence, they're like, Mike, who? What do you want? No. Oh yeah, we've been in communication about this transaction.
Absolutely.
Yeah.
Absolutely.
No, spot on. No, I got to write that down. That's something I'm going to start doing, making sure, because that's one of those 30% of the things I do. I got to get that to 90% because I think that is a very useful tool. Well, Travis, I think you were, again, just spot on with answering all these questions. And, the whole purpose of this video, this channel is I get these questions all the time, right? These aren't like, I didn't pull them out of my back pocket. These are questions that are constantly asked by buyers and or sellers. And so what not a better way to explain it and have a video for it, and then you can always reference it. I'm sure this is similar, not just in New York. I'm sure this is happening in other urban metropolitan areas where people are moving outside of the hub. I know it's happening in Chicago. My best friend lives in Chicago, and he lives right outside of the city. And when he first moved there, he moved into like a new subdevelopment. There wasn't much going on, and now there's like more traffic, more cars, so it's happening everywhere. And the conversations, I think, are the same. Money is money. You're gonna need a mortgage here just the way you need it in California. It's all the same.
Right.
So those principles will not change. So I thank you so much again, Travis, for taking the time out and really dropping some knowledge for our people here on YouTube. All right.
Thanks for having me.